This your screen, right?
Yeah, this is my screen.
So I'm gonna have to work. We're gonna have to work together. I'm gonna tell you where to go at.
That's
So,
cool.
all right. So, for those who don't know, um, first things first. I want to talk about the orb, and then we're gonna talk about market structure. So, the orb. Basically, we want to go there first. So, what we do in the orb is basically we take when they open and close at 9:30. This is Eastern Standard Time. What we're gonna do is we'll go to our 15-minute chart and wait for that 15 minutes to print. And that's gonna be our orb. That's gonna be where we're gonna trade around that. All right. So if you can, Jay, can you go ahead and draw an orb up real quick?
Yeah, let me clear my screen. Oop, I did not mean to do that. I meant to clear the drawing. Yeah. No, fuck it, I'll just redraw them. It's fine. That's cool. Uh oh, you mean 9:30 in the morning? My bad.
Yeah, go to your 9:30 Eastern. I don't know. Maybe we should go to the
I was gonna
actually.
do the Asian session, or my bad.
Yeah, I just wanted to show him for the day. Then today had because I think
Yeah, let's
he
do
had a bunch
today.
of questions, and then he had a bunch of questions about how to actually draw our key levels also. So um, I guess I'll do the oil first, and then I'll start. Maybe Sally will jump in, but I'll show him how I draw my key levels through you. All right, so this is our orb, the first 15 minutes of the 9:30 candle. And so basically, what we do is we'll draw an orb, we'll take our 15 minute and wait for it to print. Once that orb prints, what we do is we drop down to the 5 minute chart. Now, this is where we trade off of the 5 minute chart. So what we do is we wait for the break of the orb. I don't know, it doesn't matter what direction it goes in. And we're not really worrying about the trend right now because more than likely, a lot of times the orb tells us the trend what we're going to trade in. Now, so as you can see, the break of the candle came from out of the orb. And right there. So it went up just a little bit, then it reversed back down into the orb and bounced off of the orb, and then it shot up for this is crazy money right here. All right. So if you would have did the retracement of the orb, you would have, I don't know how many points that was, because I actually missed that. What we're looking at, it's kind of small amount, so you got to tell me what that is. Um, if you would have caught that, you would have made some money today just by trading the orb. Now notice we don't have any EMAs on here, right? So we're not really worrying about the EMAs in this strategy as of yet. But but so this is where you would have made money on the retracement of the orb, bouncing off the orb and it shot up, and you would have made you a good amount of money. Now for me, I got into this, I saw this trade and I missed this trade. And I think I put it in the chat. I said, well, I'm gonna catch it on the reverse because wherever price goes and prints, it's always gonna I'm gonna say always, but 85% of the time it's gonna come right back where the print was. So what I'm doing is now I'm waiting for it to hit a key level. Now, key levels are this is where you have to know how to draw your levels. And so what you would do to draw the level, and I'm not trying to work you that much on Jay, because you'll be having to draw. I think you already got. Can you pull up your levels? Do you already got them drawn up, or you would have to draw them all over again? So there we go. All right. So the way we draw levels. So, because I think this is where the young man had a lot of different problems with trying to understand the levels. You're going to draw your levels whatever there is buyers and sellers that's really strong, and more than likely that's going to be at little areas where you see pivot points where the markets shift and it turn. So at the very um, see that's a level right there that was already drawn. So what I saw when the price hit that level right there, I saw that it wicked. You see that wick right there. And so what now I'm waiting for a bearish candle to form that. So when I saw that bearish candle, the red one right there, when it formatted, I already feel now I'm ready to go into a sale. So right there at 42.85, I jumped right on in and rolled that.
One.
My key target
Yeah,
was,
just one.
yeah, my key target was the orb because that's where price went at. So once it hit the orb, once it came down all the way to the orb, I took I took partials. Now at this point, now I'm just gonna it's a risk-free trade now, and I'm gonna follow that all the way down, and price just drop. It just melts
This one?
all
It's
the way
just this one
down
clock?
right there. So that's where price melted at. And then when it showed another sign, when it hit on the key level right there, that was my time to get out because now this is a sign of reversal. Now I didn't go all the way up, but then that's when I got right back into the sale from that second candle right there. So I got into a sale and rolled that up and still made a little bit of cheese on that right there. When it came back to break even, that's when I closed the trade because it really didn't have any structure behind that. But that was a little extra on top of what I had already made from that trade right there. So, but if I was aware, I would have caught this on the orb and I would have caught this on the market structure right there where it hit on the market structure. So this is kind of what we do is basically we put all of these strategies together to make one strategy. Now we got a strategy that we call the ICO 13. So that's us putting we what we do is we put ICC together along with the orb, along with the 13 EMA. Now you see what a 13 now let's say you missed the trade, you didn't catch it way up at the top where I was at. All right. So now you see what Doyle's 13 EMA crossed that right there. So it crossed right there and went down into the actual orb itself. So this is extra confluence right there that you know that this is going to be a winning trade because now we're once it did not
Yeah,
retrace
it should
off.
be helping them.
Yeah, thank you, Sally. I'm gonna need your help on this too, bro. So once it retraced back down into the
Which one?
orb, you know
Uh-huh.
what I'm saying? So it hit the 13 EMA, it traced down into the
What do
orb,
you? What am I doing?
and
What you
it
mean?
just
What you talking about? These? Okay.
yeah, and price just took off and kept on going. This is like just confluence, you know what I'm saying, for us to know that this is going to be a crazy trade. So once you see it, once it hit that 13 EMA and went into the orb, you could add contracts on top of that, and contracts on contracts on contracts, and came out like crazy because price just melted. You know what I'm saying? So that's it. We don't complicate this strategy. It's just a simple strategy. Market structure is key. That's the key of all everything that we do. So once you know that market, price hitting off of these key levels, so that's the main thing we're looking for is how price is going to react off a key level. You know what I'm saying? So that's how we trade the IC oil 13. Market structure is the key thing. And there's other ways that we trade the IC oil. There's other ways that we trade the orb, and there's other ways that we trade the market structure ICC. But this is the main thing right here. We're looking for
You're welcome.
price reaction
We
off
about
of
to
these
start
key
getting
levels. So it's very important to know how to uh, it's very important to know how to mark up your key levels. So that's the trade for the day, kind of a breakdown of how we got, what I'm saying, how we got it. I think a lot of people took the trade. I think a lot of people caught this big move. Even if you caught it in a little late, you still made a lot of money because this was a crazy big move. I just happened to catch it in early because I was waiting for it. You know what I'm saying? Because I knew that I missed the orb retracement. So I called it out on the call, like I'm just gonna wait for the reversal. You know what I'm saying? And that's how we kind of look at it. We just look and see what it's gonna do at each key level. And so once you know how to draw your key levels, you know what I'm saying, you can really maximize your trade. Sally, you're able to talk, bro?
My bad. What you say?
You able to talk? You got
Yep. In like
you're breaking up. Okay, so once Sally come back in, so here's another thing. It's important to know how to draw key levels. Like this is going to be your money. So, like if you can't draw the key level, if you draw the wrong key level, if you're not drawing the key levels in the right place, you might be misled about what price is getting ready to do. So it's very important to know that price is going to react off of certain key levels, what I'm saying, in the market. And we mark up the major ones. Now, what printed today was just a beautiful trade. I mean, if you caught this, it's just like, you probably won't have to even trade for the next 3 days if you caught this and had enough contracts on
My
there.
boy.
I mean, what I'm saying? So, I made big on this trade, what I'm saying? I know Sally Pearl posted what he made. I see quite a lot of other people made some big money on this trade too. So,
Well, I ain't catch
yeah.
the one going down, but I caught that one going up.
Yep. That's the one I missed. I was mad about that. And I said, well,
I
I
told you I was
hadn't,
gonna go up. I said this is not about to go up.
I
Man,
wouldn't,
that's the magic sauce right there. Do it every time.
yeah.
Yep.
I missed it because I wasn't at a position to trade it. I was like, oh my God, I saw this trade. And then when I got to a position to trade it, you know what I'm saying, where I was at, I said, well, I know it's gonna come back down because it got to come where it met at. And that's, what I'm saying, for who's on the call, that's kind of what I do. I trade where it comes from. So, you know what I'm saying? Like that's my point. It's not so much of a 1-to-1 for me or a 2-to-1 for me. I'm gonna try to trade where the price actually came from. You know what I'm saying? And usually that's gonna give me more than a 1-to-1 or a 1-to-1 or better. You know what I'm saying? I'm just looking for where price actually went, and that's my target. Excuse me, and that's my target area right there. But yeah, I mean, it's simple. You know what I'm saying? Once you know
Hey,
how to draw the
I'm
key
about to get on
levels,
the sauce. So I need you to be quiet, okay? If you wanna make noise, you can go downstairs.
NQ had a good move too going down. It's like they today the market was just good.
yeah, it acted right today. I mean,
It
I
did.
saw a lot of different setups. Um, you know what I'm saying? Me personally, I just took the two gold trades, and
Mm.
shoot, that one gold trade just put me in the game. And that second one, I was hoping it would buy back up because that's normally what's will do. It did the bounce. I still got something out of that move right there. You know what I'm saying?
Yep.
So
It went way up farther than what I thought it would actually. I knew it was
uh,
gonna go up, but it went way up.
nice, nice. That's what's up. So yeah, I mean that's it in a nutshell. But I think I don't. Jay, I know you probably don't want to do this for the sake of, but
No, that's cool.
if you can, I kind of want Buddy to see. I hope somebody recording this for him to show how you draw your levels so that he could see how to draw a level because he had a bunch of questions about levels and I couldn't basically. I tried to explain to him as much as I could, or maybe, what I'm saying? And, but it was just, I mean, I don't know how to help, you know what I'm saying, without him actually seeing it. So maybe he can see it, for
Yeah.
someone who knows how to draw the levels up. So maybe you can
Yeah, I'm
explain, or
finna
maybe you and Sally.
yeah, I could share my screen and show real quick.
All right. And somebody recording this for him, right?
Yeah.
All right.
All right. All right. So this is how I pretty much that's how I pretty much draw my levels. I always start off on I like the 1 hour because the 1 hour just better to me. 4 hour kind of it's a more powerful time frame, but it's a lot more information on it. So I like to do the 1 hour because you can get 8 hours out of a trade session or whatever when you're doing like New York or whatever the case may be. So you got more information happening over a longer period, but not too long. So all I'm looking at when I come to my charts, so even like this little stuff right here, these are the only levels that I'm really worried about because these are like the most relevant levels. We got other stuff that's going on, but it's not relevant to the levels that we need to be marking. So I'll start at the top. So let me see. I'll come down to right here. Let me get my little my arrow at. And so I come down so I'm looking, the first thing I'm looking for is where was a very strong push, a strong sell off. Those are pretty much like the areas that I'm looking for. So I looked right here because this clearly is a strong push all the way up to here, right? So we know that it's sellers around here, but we're not too much worried about it. We want to kind of see where is it going to stop at. So so once it stopped, we see that it got up here. So I'm not going to immediately mark this level because it's not enough information yet. So because I think this is like when the new calendar just had came out, so it wasn't really too much over here yet. But I knew all this is going to come eventually because of how hard this pushed up and then eventually stopped, came back down, went up or whatever. So the first thing I'm looking at is this swing right here. And this is a clear swing because it's going back down to make a higher low. And then price came back up here a second time, wicked a couple times, sold off. So we know that this is a zone up here. So when I say levels, I'm not necessarily talking about just a straight number because it's never just going to be a straight number. It's always going to be an area where price is doing a specific thing or having a reaction at. So we know that around here it's heavy sellers in this area. So we just pretty much mark it across just however far you can get it across because 9 times out of 10, price will come back to this point just because of the big moves that happen. So we see this push down here. You see it come back up here, push down again. And this time when it pushed all the way down here. So we might be having these lows and lower highs and stuff, which is cool, which I'll talk about later. But we want to look at the highest point and the lowest point. So that's the whole move right here. All this stuff that's in here, it's just all just noise. Different things that you can look at, different trades that you could take, all that type of stuff. That don't really matter when you start marking your zones. You want to more so look at the highest point and the lowest point because that's when you'll start to figure out, what other zones you got to mark later down the line. So we see that every time price comes up in this area, it's getting pushed down because it did it right here, pushed down, came back up right here, pushed down, all the way down. So we know that this is where heavy sellers are at. So this is why I marked this zone up here. And I usually like to do like the body of the candle to the end of the wick. And so in this case, I just pretty much put the wick all the way up here because this seller's all in this area. And so then I marked this level because when it came back down, we know it was buyers here at one point that pushed it back up, came back up here, came back down. Still in the same area, buyers pushed it back up. Just this time they wasn't able to push it all the way back up, which ended up creating a downtrend on the higher time frame, which is a good thing. And so I'm gonna mark this level because I see price came here twice and did the same thing. So now I got a nice little range. So I know up here below this level is sellers, or price wants to sell, I should say. And then at this level, price is gonna want to push up because it did it before. And that's because it made this higher low and then it broke this swing right here. Now, just because it did that doesn't mean it's going to happen all the time because that's just not, we know that that's not how the markets work. It's just whatever they want to do. But we know that when it does push, it wants to go up here. So it wants to buy up above this level right here. So now that we know that, okay, we got sellers here, we got buyers here. Now we got to wait to see, okay, what's the next move going to be? So since we are in a low, so we started with an uptrend, but then the uptrend was invalidated when we had created this higher low, and then we made a lower high. So now we're looking to see, okay, price should never make a lower high on a higher time frame if it doesn't want to go a specific direction. So now we're looking to see, okay, what price is going to do next. If it breaks this zone, we know that, okay, whatever is happening, we want to take note of it. So under this level, because we see that there's buyers in this level, once they broke past this, we got all sellers under here, people that want to sell. So you can see once you come down here, I don't really count this because it's news. So, I mean, it is what it is. But even if you take this candle out, it still was pushing down. Came back up to this level, pushed back down. So now we know under this level, price is going to sell. So then as we see, every time you go look under this level, price is selling. Besides, of course, when they come back up to correct. But anytime it get here, it was selling off. Came up here, sold off. Came back up here, sold off. Came up here, it sold off, but then it ended up making a lower high, which I'll get into the market structure behind why it's like this in a second. And then it pushed back up. So we know above this level, price wants to buy because it did it before. It pushed up, it bought, pushed up, it bought, pushed up, it bought. So we know that once it breaks this level, it's going to go up. And the next place that it's going to want to go is to this next zone up here because that's the next key level that most of the time they're going to try to target. But as we've seen before, when prices get up here, we know it's crazy sellers up here. So it's going to take a lot of money to break this level because of how hard it pushed off this time right here all the way down. So once it came back up here, we see as soon as it tapped into that zone, sold off like crazy. And this time it broke this one and it broke this one. So as of right now, if we're looking at market structure, we broke this this swing low right here, and we broke this swing low right here. So now we're looking at the market is going to start going into selling because it broke this zone, and we know under here it's going to try to sell if it's coming from the top. So now we're going to start looking at these other swings that's happening, and those could be targets that they're going to try to either get to or they're going to try to break. So now we know that in this range, we got sellers under, buyers above, and we got a heavy, heavy support right here. Because when you look at it right here, price pushed up and it never came back down here. So we know it's crazy sellers right here. And this is why we've been in this range for so long. This is just the sellers and the buyers is crazy in this area right here. They like really battling it out. So that's how I pretty much mark my zone. So I'm looking at wicks. I'm looking at where price came to a couple of times. You can also look, in the past and see where other pivot points and stuff are at. You'll see that this all around this same little area. But usually I'll just like to look back like maybe like a week, especially when we get into a phase like this where we just kind of like range it back and forth on a higher time frame. So that's pretty much how I'm looking at it. So I'm looking at these wicks right here, looking at Ricks right here with the reactions. I see this nice wick right here and it pushed off of here. So this is a key level because of how strong it pushed off. I'm looking at here because price came back to this level multiple times. So this is an important level to have marked up because you see it's a wick here, a couple wicks here, wick here, wick here, here. Like it's a whole lot of them. So that's another level that's relevant to mark. And then this one. So that's pretty much how I mark my levels up, just looking at what price is actually doing, how it's reacting to these areas, and then knowing where buyers and sellers are. Because I'm pretty sure people today thought that price was going to probably get pushed past this, but if they weren't looking before and how strong this push was right here, they probably would have thought it was going to break, but it's just not ready to do that yet because it's not enough liquidity to pass by this move. This move was made. Like, this was a crazy move right here because we thought this was bad, but this right here, from this point all the way down here, this was a long move right here. You feel me? So that's how I'll be looking at my zones and how I mark them. And when I mark these, I mark them early, then I just bring them across. And then how you know your zone is valid is when you start to see price going to these areas. So then that's how you know, okay, this is a solid zone. I can mark this and keep this up. So I'm gonna keep these zones marked until we break out of this little area we in right here. So these is pretty much my main zones right now. These little zones, these little push offs and stuff like this, it ain't really too important because it's not really a big move like that. Well, this one kind of is because that's why I got this black line right here. Because when you look at it, it kind of pushed up all of this. So that could be another area that you want to mark. But I wouldn't put a whole zone just yet. Well, actually, you know what? I actually would because it's starting to come down. So I would mark this zone too. So let me mark that right now while I'm talking. So yeah, I'm gonna just go from the body all the way over, then to the bottom of this wick. So this is another zone that we can start to watch at, or watch when price starts to come down this way. So yeah, that's how I pretty much that's how I mark my zones up though.
That's what's up. So that's that's it in a nutshell. So you know what I'm saying? That's how you mark your levels up.
Yeah.
You know what I mean?
And
So
let's get into a little bit of market structure because I don't think some people really fully understand market structure like that. I think they just know that it's higher highs and higher lows, but it's actually like a I call it a market structure strategy in itself because when you start looking at the higher time frames, like the higher ones like 30 minutes, hour, 4, daily, weekly, when you start getting up to these time frames, market structure is very respected. When you start getting into like the 15, the 5, the 2 to 1, it's a lot of market structure lying going on. Like it just don't be making sense sometimes. Like it be stuff that's happening that it doesn't get respected. But when you on those higher time frames with market structure, you can get a lot of respect with what's supposed to happen. So if you see this red line, I had drew this out earlier. I'll probably do it again just so I can show y'all how the higher time frame is like very, very respected. And the reason why I look at market structure on the higher time frame is because you can get a better idea of what price is doing. So when we're looking at these candles, we knowing that it's a whole lot of information that's that's going on in each of these candles. So you got uptrends, downtrends, you got supply and demands, breakouts, all type of stuff that's happening in this one candle when you start to scale in. You feel me? So the reason why I look at the higher time frame is so I can get an idea of where price is headed. And that's part of what ICC is understanding your swing points, your market structure, your price action to know where price is going. And you can kind of have a better idea of where to place those stop losses at, depending on the time, because you know we using props sometimes, and with props they kick you out or whatever. You can't really hold trades for too long unless it's like you get a move in the Asian session or whatever. So let me redo this real quick. So when we start looking at market structure on the higher time frame, I'll start at this swing right here. So coming from down here, we made a new high, right? So I'll start at this new high. So if we were in the uptrend on the way up here. So we got up here. This was a new high, and you know when we're in the uptrend, we got higher highs, higher lows, right? So you got to think of this on the bigger picture. So these moves are long moves versus when we're looking at like the 5 minute, 15 minute and stuff like that. So we got a high right here. We come down to this lowest point, that's a higher low. So then we come up here to the highest point. Ah, shit. Hold on, my bad. I need the path one. Yeah, so we start up here, the highest point, come down here to the lowest point, come back up here to this high point. So according to market structure, this is an uptrend, right? Because we got a higher high, pulled back, made a higher low, and we continued up to make another high. But then price came back down, right? It made a higher low because it never broke this area right here. So we still in the uptrend. And then price came up here at the highest point and made a lower high. So technically, we are still in the uptrend until this swing right here is broke. So once this swing is broke, that invalidates the uptrend. So once price got right here and make this higher low or this lower high, and it failed to make a high, this right here is letting you know price is about to reverse and go the other way. And so as you see, we make this lower high, and then price just went all the way down to here. So if you want to mark everything, you can. So you can mark this low. You can come back up to this one, come back down to here, come back up to here, right? So most people would probably look at this and be like, oh, well, it broke structure. Yeah, it broke structure, and it has a characteristic of like wanting to go the other way. But the reason why this is still considered a downtrend, even though we broke this swing, is because this one up here ain't really broke yet. So once this one is officially broke, we'll be considered out of a downtrend, right? So they came up here, boom, came down here, and we still breaking lows. So since we broke this low, that's how we know, okay, we still in the downtrend, even though we just made this higher high, but it broke this. So we still in the downtrend. And price can pull back as much as it want to, but if it doesn't break this one up here, it's invalid. So then we come down here, right? We make a new low in the market. We come back up here because price got it correct. Plus we had the zones, which we know that got a lot of support. So then up here is gonna come all the way back up. It still didn't break this one, right? So technically we still in the downtrend because it broke this low and price never broke this high right here. So we still in the downtrend. So boom, even though price is up here. So that's the thing about being on the trends. Price can come up all the way to like right here. And as long as it don't break this, it's still valid that we're in the downtrend. So as you see, it came up here, made another lower high, came back down here. Now we see that we got a higher low. So now we're looking like, okay, what is price trying to do? Price wants to sell or wants to buy up from this area. So then once we got here, we made a new high, right? The highest point. And then we made like I just say it's equal low, to be honest. So technically, even with this happening, we were still in the downtrend. Even though it's up here, we're still in the downtrend. But what happened was it never broke this, so it made a equal low. So I don't really count that as a reversal just yet. So then we came down here. So for us to really be validated that it's going to be a reversal, it has to break this one, but it never came back up there and broke it, right? So boom, it came up here, made another lower high, kept pushing down. So then once we got to this zone, came back up, made another lower high, but then the reversal starts right here. Why? Because it never broke this low down here. It made a lower high, didn't break this, and then it broke this one right here. But that's how you could pretty much identify a true reversal on the higher time frame. So now when we're looking at like 5 minutes, 15 minutes, you're gonna be seeing stuff going up, going down, left, right. But that's not the point of looking at the higher time frame. The higher time frame is gonna tell you where price is going, so you can have a better idea of what you need to be looking for a trade, whether it's buys or sales, if you want to trade that type of way or whatever. So boom, we go down here, we make a lower high, broke this swing, made a higher high, came back down here, made another higher low. So now we officially are in the uptrend. So you can start looking for entries, which I'll get to in a second if you want to start placing like easier entries or safer entries. So then, yeah, we came right here, made another lower high. And then from here, we in this zone, right? So knowing from what happened before when we was in this zone, how it was pushing up, we can expect it to continue up because we are in a validated uptrend. We got a low, a lower high, higher low, higher high, higher low, and then boom, we go all the way up to this point. So this is where you got to start looking at your zones and why it's important to have them marked up. Because once we broke this swing right here, we broke all of these swings, right? So now the next swing that we need to break in order for it to be continuing up or a continuation, we got to break this one right here. And I think this is what that one guy was having the issue with not really seeing. So once this price came up here, and we already know this is a place where it's a whole lot of sellers at, we still would have to look to see if this was going to get broke. And it never broke this one, and it didn't even really break this one. So that right there was an immediate sign that it's about to sell off. And then that's exactly what it did. Sold off, came right here into our zone, had a little push up, like it usually do. Came up, made this lower high, and then it just continued down. And now we can say that we in a valid downtrend because we made this high, made this low, price failed to make a higher high, and now we broke this swing right here. So this is an official sign that we're about to start to go in the downtrend, unless price was to start right here, come back up, and break this swing. Then you can start looking at a reversal because it shouldn't do that, right? And then yeah, so the thing about the downtrends is that even if price was to pull all the way back up to like right here, as long as it don't break this swing, our bias of the downtrend is going to be balanced. So it can do anything in this area. It can come up to here, go down. Shit, what happened? I don't know what happened, but yeah, it can come up into here and go down. It can come up to right here and go down. It don't even matter. As long as we're not breaking this swing, we good to continue down, to keep looking for sales, even if it pulls up. So that's why when I say you start scaling in, you can start scaling in to look at, like the other strategies with like the supply and demand and 13 EMA, the orb. But it's good to have an overall idea of what's trending, because then at that point you'll have better setups in the direction that price is going on a higher time frame. So like when we come down here to the 15, we kind of see the same structure is happening. All right. Same type of stuff. It's respecting price the whole time. And you see right here, you can see that it shifts when it made this higher low and it broke this one. You see that it made another higher low, came up, boom, boom. Then now it broke this one. So now we officially back down downtrend or whatever. So now for people who want to get in, like say if you aren't having the best time with the orb strategy, the 13 EMA breakout, or anything like that, one thing about market structure is that price is going to always return back to a point that it made, whether it's right after, later, or whatever. So like if I was to be doing some type of trading, which this is how I trade on my live account, I do safer interest because I'm actually dealing with like real money. So it's a little bit different from when I be on the prop. So like if I was right here, right, I got this higher high, I come down, make this higher low, we break structure up, make a new high, we come back down, but it didn't really break this yet. But then price went up and made a lower high. So price, once it made the lower high, it has to come back down to this point every time. And even if it's not exactly, but it's going to be in that area, right? So if you were looking at this or seeing this play out live, you've seen this point right here, this low, and you see this swing up here, and then you see that price start to make a low and it broke this point. Like I said before, price ain't gonna make a lower high if it doesn't want to keep going down. So if you want to be safe on an entry, and this is just another entry model that you can use if you just want to kind of try it out or try to get a better entry on your trades or whatever. You could do this. So since price made this higher low, right? We were still saying, okay, this is an uptrend still because it's following the rules. Higher high, higher low, higher high, higher low. But then the price fell, right? Boom. So now we're looking at this area to where we could enter on the downside. So once price came up here and made this lower high, if you didn't catch this initial reversal, because it's kind of hard to see when you like on the 5 minute or on the 15 minute, because of it's probably was like doing a little consolidation and ranging or whatever. You can still have this mark, and once price gets down to this point, you can enter right here. And so once you enter right here, depending on your risk, this is where risk management comes in at. You can enter right here, and this is gonna look a little bit crazy, but I'm gonna show y'all. I'm gonna show y'all anyway. But so we can get into a short position right here, right? enter on this candle. And let's just say you want to target the next, we'll look back. We'll say, okay, we'll look at the last swings that was in the past. So we'll just say, let's just target this swing down here, this higher low right here, right? So we'll make our target. And the reason why I will put my stop loss up here. So again, it's all about your risk management. This is a big stop loss, but hear me out. The reason why I will put my stop loss way up here is because when we had this high, made this higher low, and we made a lower high, this is our protected swing right here. At this point, we're going to go in a downtrend because price ended up breaking this point, right? So this is a protected swing. So if we are set on, okay, yeah, price is about to start going down, it's on the downtrend, it's no reason price should ever come back to this point. So this is why I will put my stop loss above this swing, because if we are in a true down trend, price will never come back up here. And if it do come back up here, then we just had our idea wrong. But like I said, when you start looking at the higher time frames, the market structure is respected. So we go back to the hour. And if you see on the higher time frame, it's respecting the structure. So it never came back up here, no matter what, because we are in the actual downtrend. Now you see it broke it, came back up, broke it, came back up, broke it. So you can have your stop right here, and you ain't even got to worry about it, because at the end of the day, on the higher time frame, it's literally telling you we are going into a downtrend. So this is why I like to put my stop loss above swing points that are protected, because the downtrend or whatever trend you win is going to always be protected if it's a true trend. So if, like I said, if it reversed on you, I mean, you just got to take an L. You got to be okay with taking the L if that wasn't happening. But 9 times out of 10, it won't, just because of how price is respected on the higher time frames. So now, if you want to see like, okay, well, shit, that is a big stop loss. Well, what about, what should I risk? So if I'm gonna risk something, not getting at that point, this point right here, and I put my stop up here, you just got to be able to manage your risk, right? So let's just say you just came in here and you were just like, you know what, I'm gonna try this out. I'm gonna see if I can trust the higher time frame and what it's telling me. I'm gonna just go in with 2 micros, right? So we'll set our entry point right here. You could do like a buy stop or a buy limit or whatever, whichever one it is to trigger you in, right? And then we'll put our stop loss above the swing, right? And then we put our take profit at the previous swing level. So you risking, if you want to do this much, you could risk 500 to make 800. You could do more to make more. I mean, it's really up to you, but this is the most safest way to enter a trade without having to really worry about getting stopped out. Because sometimes you might be like, all right, well, shoot, I'm gonna just get in. I'm gonna put my stop loss just a couple points above. And if you would have did that, let's just say, I'm gonna just put it at this swing right here. You're gonna get stopped out because look what it came up and did, kicked you out. But since we're on a true downtrend, it's not gonna come back up here if it's actually valid. So this is like a better point to put your stop loss at. And like I said, if you want to risk more, so say if you got a 10K account, you're like, man, you know what? Today I'm feeling good. I want to risk. I want to do. Let me see. I want to do my full contract size that I can do on Top Steps. I'm gonna do 5. I'm gonna do 5 minis, right? I'm gonna risk. Well, not that much. Hold on. Let's do like 15. So let's say you do 15 micros, right? And you say, okay, today I got my buffer is up. I got 20K in my buffer, whatever. I risk this much to be able to make this much. So it just kind of just depends on how much you want to risk or whatever. But this is just another way to enter trades to be a little more safer on your entry and not getting wicked out and actually trusting the higher time frames to actually do what it's supposed to do and respect structure. Even if you was to bring it all the way down here to this zone, you still could have made, a decent amount of money. So that's just another way to enter. Like if you having problems with being profitable, you having problems with, getting faked out with the EMAs and stuff like that. This is one way that you can enter trades and be a little more relaxed because it's going to always respect structure on the higher time frame. So I call these time frames 15 and up. I'll call them the major structures, and then anything under 15 minutes is like micro structures. And you just a whole lot of line that be going on in there. So this is just a different way that you can enter it based off of just pure market structure. And you can do this a whole lot of times. You can even come up here, come down. You can say, okay, you know what? I want to enter like somewhere in one of these swings. You can do the same thing. Just have your swing marked off, enter. As long as it's respecting structure, you can always get in and get a good, nice little trade. So that's when it comes time to really manage what you want to do, because you can have, a good risk to reward, and you just got to have a trading plan. If you want to get in to do like a 1 to 2, 1 to 3, you could definitely do that. Or if you just want to get a dollar amount, you could definitely do that, because at the end of the day, it's going to respect the structure no matter what. So that's kind of how I look at market structure. And that's kind of like the overall view of ICC. Because if you come back and look at this sell-off that happened over here, we can mark up the orb, right? Like, right, this one right here. So we can mark up the orb, come up in here. We see we on the uptrend on the hour time frame. You see it right here, right? Come back down to 15 for an entry. You could have got in off the break of this orb. If you missed that, you could have got in up here if you was paying attention to the zone up here. And if you missed that, you could still use your orb and the 13 EMA to get in and still make money. So all this stuff all plays a part together. So if you miss one thing, you still got other confluences that you can use to still enter the trade. So even if you was to get in after the orb, you still was gonna make a good amount of money because it's respected structure. Came up, made a lower high, broke the high, continued down. You could have entered from here, you could have entered up here, or you could even enter right here at this swing point. Because as soon as you enter, you put your stop loss up here. It never came back because it's respecting and then continue down. So that's pretty much how I look at it. So I use the higher time frames to get actual direction. And then I have way more winning trades when I'm actually trading with the trend on the higher time frame versus me looking at a trend on the lower time frame, because that shit can reverse at any moment. So yeah, that's pretty much how I look at it, man. So I hope that helps somebody. If not, I don't know. But yeah, that's all I gotta say. That's pretty much it.
Good stuff. Good stuff. Good stuff, Sally.
Yes, sir.
So basically, that's what happened today, man. When we know how to actually look at market structure, because market structure is the most important thing to all the strategies. You know what I'm saying? It's like, I believe, you know, without market structure, none of the strategies will be effective. You know what I'm saying? So knowing market structure and how to draw the levels, and then, you know what I'm saying, all these different ways that we could have got in. Because even I trade today, like what Sally is saying, that, I got in early off of the market structure, basically. But if I would have missed that, I could have got in, you know, off of the orb, or even the 13 EMA. All of that plays a part, works together to conform one full strategy. So you got three different ways to get into the market, you know. And so this will keep you from actually getting chopped up just by trading one strategy. When you got a bunch of different strategies that you can put together, you know what I'm saying, we can make, so you can make a lot of money like that. But good stuff, Sally, man. Uh Anybody
Yes,
got any
sir.
questions?
Yeah, that's my main thing, man, is learning market structure, bro. That stuff will
Yeah.
save you, especially on the higher time frame, man. Because maybe too many times I started looking at how the fake outs was happening on the 13 EMAs because market structure wasn't lining up on the higher time frames with the direction that the breakouts were supposed to happen. That's why people was getting cooked. You'd go into a 13 EMA breakout, boom, but you right at a lower high that's being formed. So it's not gonna go nowhere. It's gonna go straight reversal on you because it's showing you on the higher time frame that that's where the market is at that time. Like, you know what I'm saying? So when you trading with the trend, as we all should know, it's better to trade with the trend than not to. You get a lot more money doing what the market is doing. That's what comes into price action. Knowing what you're seeing, knowing what the price is telling you. From ya.
That's what's. Man, I joined the party late, man. My bad, y'all. TSN was giving me an issue earlier.
Yo, yep. We're just going over, how to draw levels and how to how to actually basically how to actually visualize market structure, because basically today that's kind of what well, if you would have caught that, that would have been your biggest move by trading straight market structure. You know what I'm saying? And then if you would have missed that, I'm just recapping. If you would have missed that, you could have caught it off the orb. You could have missed. You could even caught the 13 EMA. All these three different ways. Or you could even do the 3-step. You know what I'm saying? All these different ways would have got you into this trade to make some big profit. You know what I'm saying? So understanding that, you know what I'm saying, you can't lose if you understand market structure and how to basically watch for your levels, you know what I'm saying? And that's it, you know what I'm saying? I walk up a few more levels simply because I like to see where price is what it's doing all the time. That's just me. I got the major levels, and then I'll mark up a few small ones also because I'll look at where price kind of was playing at, and that's just for my own personal preference because I want to see, you know, what actually is price doing at these levels. Is it actually wicking off of these levels, or if it actually is going? But there's different ways to actually, trade it. But as long as you got the major levels marked up, man, it's just irrelevant that it's just obvious you'll make money. You know what I'm saying? It's just like that, doing knowing market structure, because the market can't hide that. They can't manipulate market structure no matter what. And one of the most important things I think Seti said, and I keep saying it also, is that if price prints in one direction, watch where it printed at, watch where it goes at, and then it's going to return there. So I literally called that out today, and I just want to make that clear. Like, I didn't know what price was going, so me personally, I kind of watch what it's going to do at each level. And so if it gives me a reaction off of that level, that tells me that it's respecting that level. And then I wait for my next candle to see what it's going to do. You know what I'm saying? If it's going to either print bullish or bearish, and then enter in right there. Either you're going to win or you're going to lose. And this is a game of probability. More than likely, it went up, and now it's going to go back down to where it came from. And so, that's kind of what I target. A lot of times I target money too, you know what I'm saying? But if I want a bigger move, I'm definitely going to target where it came from my runner. Just let it run to where price comes from. And if it goes further than that, hey man, that's a plus. If not, it pretty much goes back where it came from. And if it doesn't, it's pretty close. You know what I'm saying? If it within a couple of points, you know what I'm saying? Normally, you know what I'm saying? So that's good stuff, Sally, man. I think you broke it down pretty good. And I wanted to kind of clear that up too, because I think Buddy could not understand how I got into that trade so early before the 13 EMAs. And I want to
that's what I'm saying. It's that right there is a perfect example of why market structure and having your zones marked is important. That was a
yeah,
perfect example right there, because you literally could have got in as soon as that candle closed. Because you
yep,
see that, okay, price is not going any higher. We had a zone where it's crazy sellers at. That zone is main. It's a whole lot of sellers right there, and they pushing that price down. They not trying to get it past that. So now you see that. I mean, it was an obvious sell. Like, if people knew market structure, that everybody would have won off that one. That was a no brainer.
no brainer. Yep, that was just it was just a beautiful trade, and then it cooked. It cooked real
Yeah,
good.
cook good, and that's
Yeah,
why
man.
I don't I use the 13 EMA, the 9 EMA, and all that stuff as extra confluence or whatever, but That's not my main focus when I'm looking at the market. That's a good thing to have on your chart, just so you can kind of see, okay, we might get a little quick breakout right here, a little quick breakout right here. But yeah, market structure before everything, because that market structure could help you avoid getting faked out on the breakout on the 13 EMA. And that happened to me too many times. So that's why I just kind of like to say, look at market structure first and then, look at everything else after that.
Yeah. So somebody asked me, somebody DM me the other day about, do I trade the 13 MA? And I'm glad you said that. I don't, just to clear it up, I don't really, it's market structure for everything.
Right.
I don't really trade the 13 MA because I'll be watching a lot of guys get cooked, you know what I'm saying, from chop. You know what I'm
Mhm.
saying? That's just confluence for me. You know
Yeah.
what I'm saying? It's like, that's an extra confluence. I don't use that as my only way to trade. I actually don't really use that as my entry. You know what I'm
Yeah.
saying? Because it's just too much. I done got cooked too many times with, trying to enter in just off of a break of a 13 MA. You know what I'm saying? It works a lot, but that's just not my entry. You know what I'm saying? That's just my preference, not to just use that as my entry model.
Right.
Market structure is the number one thing that we use, and then all the other strategies that we use is basically it piggy banks off of market structure because that's the basis of everything. Now, the orb is when the market opens, the orb can give you confluence of where you trading at. You know what I'm saying? Now you can use that too. Now the icy orb, we use the icy orb is a strategy where you basically are putting all of these different strategies together, and it works best from the fake outs. So like, let's say you had an orb that formed, and the price broke out of that orb, and it faked out. It came back inside of the orb. So now what it did was it created a lower low, or either whatever direction is coming in. Normally when it does a fake out, it's creating a either a lower low or a lower high. And so if you look left, you'll see, okay, where I got a higher high here, and then it created a lower low right here. Okay, so the ICO, basically you can actually get into the trade when it breaks back into the orb from that point and ride it on down if you're in a sale, or vice versa. If it broke faked out to the to the bottom side or whatever, and you realize that, okay, it created a higher high at that point, when it comes back into the orb, you can actually get into the trade like that. That's the icy orb basically, and you can ride that all the way up to where it's going. And so by the time it break out, you're already in the trade. You're already in the trade early. Or you can use straight market structure. A straight market structure is basically when price reacts off of a key level. You know what I'm saying? You watch for the reaction of that. I love those wicks when it wicks off a key level, because that's letting me know, okay, it's rejecting that area, and okay, it's time to go ahead. You can get in right then and there, and that's probably your earliest entry from anything else. You know what I'm saying? So these are how we trade. These are different strategies that we trade, but this is how we win. And like I said, it's like clockwork, man. It's too easy. It's like wherever price prints at, it's gonna go up or either down, but it's gonna come back to where it came from. You can target that area. I literally trade like that, and I'll be winning. Like, I target the area where it came from. So if I'm in a sale, I'm gonna look at, okay, well, where did it come from? I'm gonna look like, where did it leave from? Like today, it bounced off the orb and sold up. So my target is when it starts. I mean, it bought up. So when it starts selling, because it bounced off the orb, that's my target area. That's where price came from. Either, so that's kind of how I trade. And if it gets some even more than that, it does. But I done back test that a whole lot. Every time it comes from a certain area, it literally goes back to that area. So this is one way you could trade and win. Um, yeah, man. So good stuff. Anybody got any? Yes, sir. Anybody got any questions?
Let's kill it on Sunday, man. So I'm at
That's
the
the
airport. I'm finna do some little back testing. So I mean,
Up
I'll
on
probably not.
Sunday, boy. Can't wait. So I've been
Yeah,
doing some
we at.
back testing too of just pretty much. I just been doing a lot more testing on the higher time frames, which is why I was saying how price reaction. I mean, how price respects structure on the higher time frames. I mean, it's like to a T. Like when something happens, and it breaks a certain point. Like it's literally that's what's happening. It's gonna do this or it's gonna do that. Like, and if you look at the chart that I was showing earlier, it's like every time it broke something or supposed to be in a downtrend, it just continued down. And then you got to think, even if it's only a downtrend for like 4 points, like as far as like the lower highs and the lower lows, that's a big move on the hour time frame. So if you were to get in on a higher time frame when you see one of these points being made and you put your stop loss above the swing, the sooner you get in, the less you're gonna have to risk above that swing that's protected. And at that point, you just literally just the trade, do what it's gonna do. Because at the end of the day, if it's gonna reverse and it stop you out, you just had your idea wrong. But if it doesn't and it's supposed to respect whatever trend that it's in, I mean, that's easy money. And then if you have a plan on top of that, of just having like a target or like a set amount of money that you want to have. So like say you want to make, $400 or $500 within like a 1-to-1 or 1-to-2 or whatever. You can literally do that and just, manage as the trade is playing out. But out of 10, when you see a lower high in a higher time frame, it's gonna respect that lower high and do what it's supposed to and go down. Versus if you see one on a 5 minute, because I didn't see a couple of them on a 5 minute and make a damn lower low, and then make a higher low, then make a higher high, then go all the way back down. And that's because that's all the information that's happening on the higher time frame is just microscopic at that point. So it's easy to get out on these lower time frames like that. That's why they say with the market structure or ICC or whatever, or in the orb, the best entries is on the lower ones, but then you want to watch what's happening on the higher ones. So it's giving you more of a clear direction of what's happening or whatever.
good stuff. Good stuff. Good stuff. I'm gonna tell y'all another strategy that I was using putting this together as well. Um, is that the reason I draw so many levels for me personally? A lot of times I draw more levels than necessary. I really don't need them all, but the reason I do that because if I want to get into a trade, I'm scalping these levels. So let me tell you what I mean. So if I see reaction, so it might be a really small move, maybe a few points. I'm putting enough contracts on there once it do a few points because if it reacts at a level, one of these I wouldn't say they're not really important levels, but they're levels. So if price actually is acting and giving me a wick off of those little smaller levels, I actually will scalp in just for maybe a couple of points and target where the actual swing is. Let me see. Actually, I know Sally, took your thing down. Let me see. But I actually was let me see, what is this at 12 o'clock? Even today at 12 o'clock, let me see, 11:20, price had bounced off of the level, and it was like acting like it wanted to go up. So I did get into a buy all the way up to the next level, and boom, boom, and then it got stuck at that other level. But then it gave me a wick of a bearish candle at about 12:30 of another bearish candle. And so what I did was I literally went after the wick. Well, around at the wick, I actually got into a little quick sale for a few points, but I put enough contracts on there, what I'm saying, to make a few thousand or a few $100s on that trade right there, just from that little small move right there. So these are different ways, man, that you could trade it. But if you want to make the big moves, yes, I mean you definitely need to go to higher time frames, and watch what price is doing at the higher time frames. I'm actually going to back test a lot more of that as well this weekend.
Yeah,
Um,
man, I'm
yeah,
telling you that higher. When I was looking at it, I'm just like, damn. I'm like, this higher time frame really, this really the move. And now I see why a lot of successful traders that aren't like scalpers and stuff, I see why they revert to the higher time frame because you could get a lot more money with a higher time frame because of how clean
structure is and how it respects structure. And I was looking, I'm just like, man, this is low key crazy. So I'm thinking about next week. I'm not going to even. I think next week I'm not going to even look at the 5 or 15. I'm gonna just stay on the hour, and then just go down to the 15 for like an entry somewhere, and just kind of see how it play out. That's gonna be my next move. So I'm gonna do that on the prop firm. So in case something go wrong.
I got you. Yeah.
Whoa, we don't lost. We don't lost.
Yeah.
So you tell me we just lost aggressive Stelly? You know,
Nah,
with the low
nah.
time frame.
Yeah, when I'm doing this next week, I'm gonna go a little bit light, just to what I'm saying, just to get some data. But if I could get wins all this week by doing that, oh yeah, I'm going crazy. If I could get a move from 42.13 all the way to 42.80 just based off of market structure, I'm going full port every time. Because if I got my swing, my protected swing is at a good area. I ain't got nothing to worry about because if it's respecting the structure, it'll never go back to that part. Especially if you want to trend, a downtrend or uptrend. So yeah, I'm gonna test it out this week, but I'm gonna log everything too. Then I'll make a little report and show everybody.
That's what's up. So you gonna wait till price come down to 42.13 on Sunday? That's what you said?
Yeah, so wherever price end up, I'm thinking it's gonna go down to that level that's below where the level it's at right now. I'm thinking it's
Yeah,
gonna go down there,
I
and then
see
at
it.
that point we gotta see what's gonna happen. If it goes down there and it respects it, because that's also a super strong
Y-
support.
Yep.
Um, so if it respects it and starts to go back up, I'm gonna try to get in at the bottom and then just hold and just see where and to see what the market structure is going to do. So I might try to get in at the bottom, or if I don't, I'm gonna get in at a swing point that it makes if it starts to go back up, like at a higher low or something. Then I'm gonna put my stop loss at the previous swing. Then I'm gonna just kind of see what happens if it's gonna respect structure or not. So I'm gonna go a little bit light just in case if I got to take a couple of L's. But from what I'm seeing,
Yeah, that's gonna
I
be a big
should.
old that's gonna be a huge stop loss though, if you do
Yeah,
that. Yeah.
yeah, that's what I'm saying. So it depends on how the market structure is going to look. So that's why I was saying I'm gonna probably go a little bit lighter just to see like, okay, how protected is this swing point if I get in at the swing and then I just put my stop loss above it if it's going to respect structure or whatever. So yeah, I'm gonna just try a couple of little different things and see how it play out
Yep. Gotcha.
because I like
That's
to
what,
be able to get into a trade and they ain't got to worry about it. I hate sitting at the computer all day. Sometimes I keep checking my phone and being stressed out.
yeah, that's deep.
Because
That is deep.
ICC technically is a swing trade strategy. It's just using ICC's swing trade strategy to be able to figure out area or where it's going to head based off of the higher time frame, which will help you get better, trades in when it comes down to like, supplies and demand and 13 EMA breakouts, orbs, and stuff like that. Because a
Yep.
lot of the orbs that we got faked out on when I was looking at the higher time frame, when it was like go up and then come back down, it was because we was on the higher time frames, we was still in the downtrend. So that was some little manipulation to get people stopped out to try to probably grab liquidity, and it just continued down. Like, you know what I'm saying? So
Yeah.
that's what I've been seeing. I'm a back test all of it though.
That actually might explain a lot of things because I was seeing like a lot of fake outs. A lot of fake outs was definitely happening with the regular orbs, the three step, and everything. So yeah, I was trying to understand this kind of the full concept on why, like the context on why that was taking place a lot more this week.
Yeah.
Yeah.
I think that's part of it. Of course, we're gonna look at market structure on a lower time frame, but I think that's what was happening. Which y'all can back test if y'all want to. But I think that's why a lot of the fake outs was happening too, because we were kind of like trying to trade counter trend to the overall trend. You know what I'm saying? So even though sometimes that can work, because sometimes you'll get them crazy wicks on the 1 hour, but then price still is respecting the overall trend. So it just kind of whatever you see at that time, you just gotta kind of have an idea of what you're looking at.
Makes sense because I'm looking at right now. let me see for today. I'm looking at price right now. I'm going to the hourly right now. All right, so the hour right now is showing that. Hmm. Right now it's showing that on the hourly time frame. If you look at this, we're making higher highs. It actually showed a uptrend on the 1 hour right now that I'm looking at. It did break up, but then it turned around and broke down. But it broke. It's if you're looking at this on the hourly. Let me put my thing up. Let me put my line chart up. Higher high,
Yeah.
higher high, higher high. It actually was going showing an uptrend, but then it came back to the orb, and then it broke structure. It broke structure to the low. I think was at 42. Was at 42.50. At
Mhm.
42.50, it broke down, and then it started. That was actually a downtrend, but it actually had already passed the orb. I'm gonna back test this and see. You know what I'm
Yeah.
saying?
Because
And
how
see
I was
what.
looking at it when I was looking at it today, we had that orb at the open of New York, and when you look at the hourly, it was an uptrend going on. So the orb seemed to be more successful going up because
Yeah,
of the trend. Even though it did that little, it broke out and it came back retested, but it had to respect the higher time frame trend, so it had to go up no matter what. You feel me? So it kind of all makes sense when I was looking at it. I'm like, damn, like we are in the uptrend, so it wouldn't make no sense for me to trade anything below or to look for a sell out of the order because on the higher time frame, we still in the uptrend making higher highs and higher lows. Like, you know what I'm saying? Especially
yeah.
on that leg to where it went up to that zone up above.
And that was a good little trade up. Yeah, off of
Yeah.
that bounce. Off of that bounce. Yeah.
Because it made that it had a higher.
So here's the question, though. This is a question. I guess we can back test and see what higher time frame should we be focusing on, like the 4 hour or either the 1 hour.
Yeah.
What should we be really focusing on as far as trend? You know what I'm
Right.
saying?
Yeah. Um yeah, I think I would think maybe the one. Well, we could back test and see, but I would say the one because I feel like the 1 hour is more like it's not too much of time like in between candles, so you can still
Yeah,
kind of see what's going on versus with the 4 hour candle you getting one candle every 4 hours, so that's a lot of information in that one candle from breakouts and supply and demands, 13 EMA breakouts, uptrends, downtrends, all on the lower time frame to complete that whole candle whether it's going to be bearish or bullish candle. But I think the 1 hour we get a lot more information as far as candles being printed to be able to kind of see, okay, we going this way or we going that way, versus like the overall of the higher time frames, like the 4 hours and the dailies and stuff. I ain't made it to that point yet.
I got you. I'm gonna see though. I'm gonna see about that. You might be on to something, Sally, about looking at this because I do know that the lower time frames there are sequences that the higher time frames go with. Like I do know that the 1 hour and the 5 minute go together. And
Right.
then you have the um like if you're trading the 15 minute, the 1 minute goes with that actually. I know a lot of
Mhm.
people think the 5 minute, but it's actually the 1 minute. And then so like if you do the 4 hour, I believe that's the 15 minute that goes with the 4 hour. So but I am gonna. So if we're gonna, I'm gonna look at it from the 1 hour. I just want to focus on one and look at it from the 1 hour because 1 hour did show an uptrend, and then it
Mhm.
broke out real nice to an uptrend. That was nice, and then it did come back and retrace the orb, and then shot up for a nice little trend,
Mhm.
for an uptrend. So right now, looking at structure on the 1 hour, it shows that it did break structure to the low. So whenever that's 6 o'clock or prints, technically, if everything follows structure like it's supposed to, Sunday we should be in a downtrend if
Yeah.
that's the case.
Right.
That's what I'm thinking. So if it broke structure, it would
Mm-hmm.
have to pull back up because we every time we break a swing, got to pull back up and make another lower high. If it doesn't break that higher low, I mean that lower high that's up there, then we will be in the official downtrend.
Downtrend, yeah.
Feel me? So then at that point, okay, we in the downtrend. So when we do mark our orb, I feel like if it is gonna be a downtrend and it's gonna have to pull back, I feel like we got a better chance of probably trading the orb to the upside for a price to make um that lower high again. And then once price makes that lower high, I mean, at that point, if we are trading out of the orb, and it should, like I said, it should go up to match with that. That could be a nice little trade. Then we can probably catch one on the downside coming down too, just based off that first orb. And then, of course, we're gonna mark our other ones, and then whichever ones we mark at those other openings or like at the 12 o'clock orb or whatever, depending on what
Yeah.
price is doing, we might be able to get a better chance with trading in the direction of whatever trend is happening on the 1 hour. So I mean, this is back testing we got to do, but I think that might be some shit right there.
It might be. It might be. You might be onto something because that's all we trying to do is develop and better everything. You know what I'm saying?
Yeah,
Because it does look like it's going to print a lower. It does look like it's going to print a lower. A lower low. You know what I'm
mm-hmm.
saying? It hadn't did it
That's
yet, but
sure.
it did. It's past that point. So if
Yeah,
they gets to that point to where it do a little pull back up on the upside, like what you're saying, like, and I agree. Uh, and form that lower low, that oil forms, man. Trade this on the sale.
hell yeah,
That
do
might
it,
be crazy, man. That might be crazy if we done figure something out. You know what I'm
man. I'm
saying?
telling you. Because
Because
I'm looking at the 1 hour because when price is in a downtrend, it always has to come back to the original point that it made, right? So even if it goes past that, it's just the fact that if we are in a downtrend and we know that it's going to have to go back to that point to make a lower high because it has to go past the one that they already made, right? Uh,
yeah,
yeah, that could be an easy sell. I mean, an easy buy up, boom, make that lower high, and then boom, get out, wait for it to go back towards wherever the orb is going. And if it's going to respect structure, we could get in the sell, and that sell might be bait.
yeah, that's double dipping too.
Yeah,
Catch it
yep.
on Catch it on the format, yep, and catch it on the actual trend going down. That's nice. That would be cool.
Definitely, I'm gonna definitely look at some of that tonight. I'll probably go
Yeah,
back like a couple days and check it out, just kind of see how time frames are matching that part.
yeah, that's deep. Yeah, I'm definitely gonna do that tonight. I'm gonna probably look at that on my Trading View account,
Or,
yeah, just to just kind of demo test that right there and um see what it does. I might try to go back a week and just see
Yeah, I got a quick
what it did
question.
all week. Yep.
yeah,
Yeah, so do you guys take partials and how guys go about that?
You want to answer, Sally, or you want?
yeah. So for me, I take partials based on so once I get into a trade, I'm already have my trade plan. Like I'm already gonna be set on okay, I want to do like a 1-to-1, 1-to-2, or I want to do a 1-to-1, 1-to-2 lead parcels or whatever. So I'm already thinking about like how many contracts I'm gonna go in with. And this is one of the reasons why I like micros is because you can manage how much you take off your trade versus like using minis or whatever, because you can have more control. So once I get to a certain point, so for me, I like to go off of dollar amount. I don't really care for points like that. So if I'm in a trade and I'm looking to get a certain amount, so let's just say I want to get in a trade and I'm see it's an A+ setup, and I know for sure today I want to at least make, I don't know, let's just say like 1,000. So once I'm in the trade and I'm gonna have my first what is it, a stop limit or a buy limit or whatever it is, I will have that set at the price where I want to take partials at. So as soon as it hit it, it's just gonna automatically take it. Then at that point, that's a risk-free trade for me because I already made what I wanted to make. Then I'll just leave runners to keep going. So I ain't gotta be worried about, losing anything. And I just put my stop loss at break even. That's how I pretty much take my parcels. I pretty much take it off of a dollar amount and just off my trading plan once I get into a trade.
Okay, cool. Okay,
So I
appreciate it.
was out there. I can't say nothing no different because that's exactly what I do. I take a dollar amount because I know what I want to make,
Right.
and you know what I'm saying. Once I get like maybe 80% in, or either the full dollar amount in a lot of cases, you know what I'm saying? That's when I start
Yeah.
taking either, the profit. But when I get about 80%, I'm starting to take some off of the level, you know what I'm
Right.
saying, to make sure that I'm
Nice.
getting what I want.
Yeah, because I've seen a lot of people they'll get into a trade and they'll have their stop loss and stuff set. I'm gonna try to do it 1 to 2, 1 to 1, and it don't never make it to they 1 to 1 or they 1 to 2.
And they lost the
They just
trade.
and they just leave it. Like, oh, I think it's gonna hit. Like, nah, like I'm securing profit. Any trade I
Mm,
get in, I'm securing some type of profit just so I can have money put up. And then if it doesn't go my way, if I put my stop loss at break even, then hey, it is what it is. And that's why I stay on the
mm,
markets and I look. Because sometimes that'll happen. Like it'll go up, almost take profit, it'll reverse on you, come down, wick everybody out, and then go the same way. So I'm gonna stay on and look because I might be able to get another entry when it go back up if it does. Like, you know what I'm saying? So I just like to just take profit regardless. If I'm seeing something green, I'm taking profit.
Yeah.
That's
for
what happened
sure.
to that's happened to Cal Heasy today, man. He didn't take no profit, ended up getting break even. It's like you gotta take your profit, bro, when you in
Yeah,
profit.
yeah. I ain't getting another chance. I ain't getting another chance, bro. That was it. That was it for me, bro. And then just for it to sell off again, bro. I was like, bro, what the heck, bro?
Right.
What the I'm like, damn.
Yeah.
For
But I
sure.
You
gotta get
got,
better, man.
Yeah, for
yeah,
sure.
you
Yeah,
got,
no, I saw. That's why I said when we lose trades, bro, it's just learning experiences, bro, just to be able to tighten up your game. Because like when I had did that move the other day, when I had bought too early off that sell off, because I didn't follow my rule by seeing the wick like I was supposed to, and I ended up what I'm saying, losing some money because what I'm saying, we still human, bro. We still gonna fuck up regardless. But I know
yeah.
I ain't gonna do that again because I wrote that down in my journal. Like, yeah, man, you need to wait till you see a wick. Like if you don't see no wick and a green bullish candle close, like you don't need to be trying to get in there. It don't make no sense.
Facts. Facts.
And when you guys double dip, like when you guys know what to get out.
Well, like I say, for me, it's a money amount. But if I really want to go big, like in a lot of cases I do when I'm confident, I'm a follow the trade to where it came from. You
Mm,
know what I'm saying? So like, like today, just that's the only example I can give. The closest examples that you probably can remember is like today, price bought up from the orb. You know what I'm saying? Like, do you know what I'm talking about when I say bought up from the orb, right?
yeah, for sure.
Okay, so price bought up off the order, like on the retest, and it went up and tapped that key level, right? So I missed the buy. So when I got into the sale, I had a money amount, but I also had a target amount also. So the target amount was right there at the order because that's where price bought up at. So that was my key target right there. You know what I'm saying? So I target normally where price comes from. If it came from one area, that's going to be my target where it goes at. Now, it like 80% of the time it goes right back to where it came from. At least that. You know what I'm saying? But if it doesn't make it, I got my money amount. You know what I'm saying? That I've already taken profit from my money. You know what I'm saying? Now
Yep.
I'm just gonna leave a runner to go and tap on to where price already came from. And if it goes past that, that's fine. If it goes near it, that's fine. But I'm not gonna let no winning trade turn negative. You know what I'm saying? It's you just don't do that. You know what I'm saying? And just that's my target. That's my target. When I see if it's looking like it's trying to reverse off of that, okay, man, I can't let that profit. I can't let thousands of dollars go down. You know what I'm saying? To nothing. I gotta get it. I gotta take it, even if I don't make my level that I'm trying to target. I got to get out of the trade. I never, say I do see some people like if it don't make their 1 to 1, they let the trade go back to nothing, and I don't think you should do that. I think you should just go ahead and take you some money off of it if we're gonna trade. You know what I'm
Yeah,
saying?
I feel like that's a form of greed. Like, cause I'm gonna just let it play out and see where, like, bro, if you already in the trade, you already in the green, take your profit, and if it don't work out like how it's supposed to, then I mean it is what it is. Like, at least you got something out of it. That's technically a winning trade, even if it didn't hit your take profit. Like, you know what I'm saying? Because I done did that plenty of times where I'm like, okay, well, I'm gonna just let me just see what it's gonna do. And I used to be getting stopped out, losing trades, and I stopped doing that shit. Like,
Yeah.
I'm losing too much, man. I need to, you know what I'm saying, to secure my profit when I can, just in case, especially if you seeing signs of a reversal or, price might wick you out or whatever the case may be and still go your way. At least you got something out of that trade. And then even if you say that, even if it does keep going in the way that you thought it was, at least you made something out of that first little attempt. You know what I'm saying? It ain't nothing to feel bad about or be like, oh man, I could have had. I mean, yeah, you could have, but is it worth losing a trade just to get back in to have to make more double than what you already made because you already lost? Like, you know what I'm saying? I done did that plenty of times, bro. I done lost and then trying to get in the trade, and the trade ended up being hecka good, but I'm just getting back break even. So to me, I just be like, damn, that's kind of a waste. Yeah,
For sure, man. Appreciate you guys.
but it's all good. Yeah, man, I'm ready for Sunday already, bro.
Yeah, man. After I took them two trades, I ain't see no more good setups, man. I was like,
Man, yeah, them setups
um,
was man perfect. I
yeah,
mean,
but
I mean everything cooked. Market structure cooked, the orb cooked to the upside and the downside. It was just like it was definitely money to be made today
yeah, man.
for sure.
Wonderful day in the neighborhood.
Man, I feel like everything. I mean, even supply and demand was working today.
Yeah, all that. But not all that. That was
Oh my
nice.
golly. Hell yeah,
That was
man.
good stuff. Yeah, man.
And that's why I just be telling people like when they be seeing the sell-offs, like don't get nervous, don't be mad, don't be trying to jump in, just wait. Cause I'm telling you, every time price sell off, and especially if it go to a zone, it's gonna do that same thing every time. It's gonna get pushed right back up for a little bit. You could go in, a little aggressive, get you some good money, then get out. Like that one girl that be up in here, I forgot her name. She been practicing on doing that with the sell off, and I think she said she had made like 2,000 a day off of that. I'm just
Talking
like,
about Jay?
man,
Talking
huh?
about Jay?
I
Talking about
think
Jay?
nah, it was some other girl. I forgot her name. I think it's like Drea or something. I think.
Uh,
Yeah, I could be wrong, but yeah, she had like she was like, I just did that. I got out. I made 2K. I'm like, oh, see, just was being patient. Made your chicken.
yeah,
Beautiful, beautiful.
that's what's up.